Welcome to Learn by Choice. So in this video we are going to talk about why inflation is rising in COVID time. So lockdown implemented to contain COVID in the month of March. So now the lockdown has been relaxed in most of the countries, most of the states. So there are indications that the economy is bouncing back. Vital economic indicators are reaching what we spent or what we used in the month of January or February. But there is a paradox which is still continuing. Why this inflation is rising? Actually it should decrease because people, they don't have money, household income has fallen down and the labor participation has fallen down. So then why this paradox? In inflation there are two kinds of inflation. One is retail inflation and wholesale inflation. Retail inflation actually measures the inflation level happening at the retail users level or maybe at the consumers level, whereas wholesale inflation is talking about the inflation or price rise at the producers level or manufacturers level. So inflation is measuring the movement of price of goods over a period of time. Services price movement are included only in CPI, not in WPI. So in WPI there is no service cost or service inflations are added or included. So inflation is measured through various surveys. They conduct various surveys, government or industrial associations. They conduct various surveys. Based on the data generated, the inflation is measured. So two kinds of inflation, as I told you, CPI and WPI. CPI is maintained by NSO. It's a statistical organization coming under Ministry of Finance. And whereas WPI is a wholesale price index, is maintained by Office of Economic Advisor. In case of CPI, 50% of the goods part of CPI are occupied by food related items. Whereas in the case of WPI, this item, the food items are only 15%. So automatically there will be a difference between CPI and WPI whenever the price of food increases. CPI captures the food price, whereas WPI partially captures. So WPI actually it is the producer's price or manufacturing price. So why price is high despite low demand in COVID time? Because demand is slightly picking up, because post ease of lockdown people are coming out to buy goods and services. It's not the real demand. So the people are coming out, whatever they should have bought or purchased during the 3-4 months, they are coming out and buying. But the availability of the goods and services are very less in the market because there are supply side constraints. The factories are not working, industries are locked down, and even the workers, they have gone to their native place. Because of that, the supply side constraints continue, and people are expecting that prices will be more in the coming time. So expectations of higher price, this is indicated by household survey conducted by Reserve Bank of India. So what is healthy rate of inflation? So Monetary Policy Committee is formed by Reserve Bank of India in the year 2016 to basically target inflation. RBI is having the inflation target at the rate of 4%. They can move between 2% above or below 4%. So basically it is 2 to 6%. They have the range in which they can, inflation can be targeted. So for a growing economy, the inflation cannot be too low. At the same time, it cannot be too high also. In the year 1980 and all, if you see that inflation used to be 12 to 18%. But now, even in 1990, the inflation used to be in double digits. But last few years, the inflation is controlled. It's in the range of 5%. It's because of the joint efforts taken by Reserve Bank of India and Government of India. So what's the effect of inflation on GDP? Whether inflation going up, is it good for the country or good for GDP? So inflation means, as I told you, it's an increase in the price. So if price is going up, automatically the consumption for particular goods and services will automatically come down. So if the consumption is coming down, the companies which are investing to produce those goods will also come down. So there is a direct correlation between GDP and inflation. One more fact to prove that there is a direct correlation: whenever the oil prices are going up, it will inflate or it will increase the prices of most of the goods, because we import oil. Oil is one of the important commodity which is being imported, and oil is important to move the goods and services from one place to other. So if oil prices are going up, automatically the prices of the commodities also will go up. Normally if there is weak demand because of higher inflation, people will be avoiding risk, so they will not take any risk, so it will lead to risk aversion. So there won't be any fresh investment. So RBI and Government of India, there are two institutions which are focusing on growth and inflation. If you see the first quarter of the current financial year, April to June 2020, so economy has fallen down by 24%, almost quarter. So now the government or RBI should focus on growth than inflation. New series of inflation index. Yes, inflation index is used for paying the inflation to government employees. So government employees with the state government and central government put together, we have some 50 lakh employees. And in the public sector banks, which also follow the inflation index based on CPI, there are 8 lakh bank employees. And in case of central public sector undertaking, there are close to 1 lakh people are employed. So government is planning to introduce new inflation index based on the year 2016, then 2001. 2001 is the current CPI index which is being used. It will move to 2016. The difference between 2001 and 2016 is, in 2001, the share of food in that index used to be higher. But now in 2016 index, it is very inclusive, including food. There are other items also included, health, education, and housing. So it is going to reflect, this index is going to reflect the right inflation, or it is going to reflect the reality of the inflation at the ground level, so that government employees, if this 2016 index is implemented, government employees may expect increase in the DA. Thank you for watching.